This is Smarter San Diego TV.
Our next guest is the Mortgage Geek, Vice President at Cornerstone Mortgage Group, Cahan, and his special guest, real estate expert, Max Folkers.
Welcome back to the show, fellas.
Thank you.
Great to have you here on a topic that's sort of been lost, unfortunately, in the news because of some shootings that happened between Orlando and Dallas. Everyone stopped talking about Brexit.
Yeah.
You know, we saw the Dow Jones has come all the way back up to 18,000 since then. So that is kind of lulling people to sleep, going, oh, it was just a little blip. But I think there might be more to this, Max, and I wanted to bring you in today so that we can discuss it.
No, it has been interesting. You know, that was huge news, a big surprise for the world as a whole. And that's in Brexit, for those of you who don't know, Britain's exit from the European Union. It came as a big shock, and it created a lot of uncertainty in the global financial markets. We saw a big fallout in the stock market, but to your point, it's kind of bounced back as everybody's digested it. And you know, one of the things we talk about in real estate is it's very local, hyper local. And this is a global event, and so the expression comes to mind, you know, think globally, act locally. And so we were kind of talking about, well, how is this going to affect the whole market and our local market here in San Diego? And, you know, there have been some interesting thoughts coming out. And, you know, one of the things that we saw immediately in the aftermath, you know, the Fed was voting on whether to raise interest rates again, and they decided not to. What we're seeing in the London or the British real estate market is a lot of the big commercial funds have actually frozen their assets because there was a run for the doors, and they just didn't have enough cash to let all their investors pull the money out. So it's kind of like, okay, time out. Let's everybody settle down here and figure out the game plan. And there's a lot of speculation on, well, how is all that in England going to affect us here in America? Again, with the Fed deciding to hold off on interest rates, not that directly correlates to our mortgage rates, but it does correlate to where the global flow of money is. And a lot of money that was sunk into Europe, the speculation is that will come into America, into safer investments such as the Treasury bonds, which, I mean, you can probably speak to how that affects mortgage interest rates better than I can.
Yeah, I think mortgages are probably the most immediate thing that we would see a benefit to, right, Sean?
Yeah, I mean, cheap money acts quick,
Yeah.
right? Like they start coming down pretty quick. But what's funny though about this time compared to like 2012 when the bond was near that, right? It was like 1.32, I think, at one point back in like 2012 or 13. Was the actual 30-year rate was lower. I think the banks were kind of like holding off a little bit and saying, hold on, let's wait. Let's wait to see if it actually holds. Then we'll adjust them. And obviously it hasn't really held because the 10-year is already back up to 1.5. It's not like, hey, jump up, enjoy, and it's not like, wow, we're already back up to 2, or back in 2014, I think it was the touch 3, right?
Yes.
So, you know, being at 1.5 is not, we're not climbing out of the hole, but the banks were kind of right in holding off and saying, hey, we're not going to go down to 3% and then come back up to create more volatility. And we lost 19 basis points this morning. So, I mean, it's starting to somewhat climb. But on the flip side, the banking rates, we're not actually seeing so much volatility because there was so much left on the table. So it's like, hey, I can still offer you 3.5 today, and it was still 3.5 yesterday, even though the market opened up 19 basis points less. That's what we're seeing on the rate sheet. There was a little bit more play. But then the institutional banks and the big box banks, Bank of America, Chase, Wells Fargo, for their retail, are coming out with some pretty nasty interest rates to retain clients.
Is that right?
Yeah.
Well, I guess they can do that, right? Because at the end of the day, you know, they're getting the free money from the Fed.
Exactly. It doesn't cost them much to do so, and kind of retain the clients and gather the clients when you can.
I think that typically when we see like something bad happen globally outside of the U.S., it's good for us Because everyone kind of goes, wait a minute, what am I going to do with my money? Oh, I need to go someplace safe. It's the U.S. It's the only place where it's safe. It's the reason why we have all these people from China buying $1 million houses sight unseen in cash.
Right.
Because they would rather it be here in a house they've never seen before than in China with them.
Yeah.
Okay.
Yeah.
So we have that going for us. So I usually see things like that are bad globally and go, probably going to be good for us somehow.
Yeah, I mean, I think you're right. Good for us in the housing market, good for us in investments, the treasury bonds, some of the safest in the world, and you actually still get a return on your money, whereas
Still get a
some
dividend.
of the countries you actually have to pay to get your money
crazy?
back. Yeah, negative interest rates.
Just insane.
Oh,
And they were talking about the U.S. possibly going into a negative, but
No.
I don't think he'll. I just won't think.
Couldn't.
I don't think he'll.
Can you imagine if the U.S. was in negative interest? That means that the whole world is in negative interest.
Correct.
Right.
Situation. What kind of a panic would people have to be in to pay someone to hold on to their money?
Gosh, yeah.
That would be an extreme panic situation. But it's happening in other countries.
Yeah, I mean, even my mattress still plays even money.
Yeah, right? Mattress in your shotgun?
Yeah.
That's 0%.
That is a thumbs up.
Hey, when I wake up in the morning, it's still the exact same amount it was when I went to bed. So
That's great. Well, I mean, I see it as probably a good thing for us in the long run. But I do wonder about some of that foreign in San Diego.
Well, I think you
because
bring up
foreign investment is kind of a big deal, and if they start to get a little cold feet on things, that
Yeah.
can change stuff.
Well, and you know what? In particular, they were talking about some resort areas like Florida that they do have a lot of British investment historically. God, I want to say the numbers were 26 billion last year of English investments in that area in real
wow.
estate.
Jeez.
And yeah, right.
a big number.
And so for that to come out of the market, there's certain areas that could certainly feel the pinch. You're right. Out here, we're a little bit more influenced by the Chinese buyers. I mean, we've got a property right kind of in this area right now that it's just offer after offer, cash, Chinese buyers. And a lot of them looking for their students. Again, uncertainty in the Chinese market, uncertainty in the European market. This seems to be the safe haven where they want to park their money.
I would expect that based on the Brexit, we will see people migrating to the United States. Whether that would be San Diego or not, I don't know, because there are certainly less expensive places to live in the United States.
Right.
But for the big money, San Diego's definitely on the map now. It's not just San Francisco and New York and
Right.
those big cities anymore.
Right.
It's San Diego's on there.
Yeah, well, and one of the things that London in particular is known for is that super high-end luxury market. We were talking, $100 million flats where people go to park their money because it's a secure investment. And now, not so much. There's some concern about the migration of jobs out of England and into the European Union as a whole, just as people want to create or keep those trade relationships that they've got going. And so again, it may, signify some of these other higher end markets, San Francisco, New York, where people go to park money in super high end properties, where the uber rich are going.
Well, I'll tell you, in London, they've had a security problem there for quite a while. There's been they have a lot of illegal immigration going on there. I mean, people just run in there, and it's kind of a mess in London. I don't know about the rest of the country,
Right.
but something like this could be a benefit in the long run. This is one of those things that might be an opportunity. I mean, if people are running for the door there, and I'm not saying run and buy, real estate in England, but I'm saying that this is what opportunities look like.
Yes.
Sure.
When people are running away from it,
Absolutely.
Do the complete opposite.
do the opposite. Go in and buy it from them.
Yeah.
So there might be some real serious opportunities, because what they could do now being separate is they could sort of like Israel become a silo and just like have their own stuff going for them, or like Brazil, for example. Some of these countries that are way more independent economically, and therefore they can afford to do more things like clean things up, hire more police, et cetera, et cetera.
Right.
So I think it could be an opportunity. It could signal potentially a really good international opportunity.
Yeah. No, I think you bring up a great point. There's two sides to every coin. For every stock that you're selling high, somebody thinks they're buying low. And you're right. Anytime you see those dramatic news stories, there is typically an opportunity there.
Yeah.
And yeah, I mean, it'll be interesting to see. I mean, again, if we think about how all those global events are going to affect us locally, I think you'd agree that, at least for the foreseeable future, interest rates probably aren't going anywhere fast.
No.
I mean, you'll get your fluctuations like you always do, but by and large,
Fluctuations are good,
yeah, that's fine.
you know, because they start to go up, people are still buying, they start to come down, refinance.
People can save money.
You know, and then they go down, then they start to go up, or they go down. People, refinance, cash out, so the banks are healthy. So yeah, it does. There's always an opportunity. It just depends on, kind of where you're located at.
Yeah, which side of the coin you're on.
Exactly.
Well, I was just curious if the big banks, the institutional banks, were invested somehow in this situation, where they were going to get burned by the Brexit. It doesn't appear that that's the case.
Wasn't Bank of America shutting down some branches?
I think there's going to be some stuff, but there's not going to be a catastrophe.
That international uncertainty may create a little more stability and prolonged growth here.
Yeah, I think we are luckily insulated in a very good way here in
Yeah.
San Diego from something like that, and from a lot of things, frankly.
Yeah.
But definitely from Brexit, I think San Diego is safe. Fellas, thank you so much for coming in today. Really appreciate your time. It's amazing.
Absolutely.
Stick around for more Smarter San Diego TV, where we guarantee to make you smarter than everyone else, commercial free.